Welcome to today. Stop losing trades in this choppy EURUSD market and start trading the range like a professional. Analyzing hourly chart, market structure is trapped in a range with a distinct internal bearish bias. After a sharp rejection from 1.1850 supply level, we have seen a series of lower highs, indicating that sellers are consistently leaning into moves. While we are currently seeing a reaction from internal demand between 1.1660 and 1.1680, multiple break of structures inside this range suggest a choppy environment focused on liquidity grabs. Trading in middle of a range often leads to unnecessary drawdowns and frustration. Always prioritize high-quality setups over frequent entries to maintain your edge. Here is our primary bearish scenario. If price rejects current supply and breaks decisively below 1.1680, we look for high probability entries. Ideal entry zone sits between 1.1740 and 1.1780. Set your stop loss above 1.1800 to protect your capital. Our objectives are clear: TP1 at 1.1680, TP2 at 1.1640, and a final TP3 at 1.1600. As long as supply zones hold, sellers remain in complete control of momentum. Alternatively, look at bullish scenario. For this to trigger, we need a strong bullish break of structure above 1.1780. Look for entries at 1.1660 to 1.1680 demand zone once a reaction is confirmed. Invalidate trade if price dips below 1.1640. Your objectives for this expansion are 1.1740, 1.1780, and major supply at 1.1850. Key levels to watch are supply zones at 1.1740 to 1.1780 and major ceiling at 1.1850. For demand, keep a close eye on 1.1660 and strong base at 1.1640.